If you own Bitmine shares, then you could create a passive income and use that income either for yourself or you can actually buy more shares, and that's actually pretty risk-free. We will talk about covered call options. We will talk about covered put options and everything as usual, as simply explained as possible.
Welcome to the game, I'm the Wolf of Dubai.
Welcome to a brand new vlog, and let me know in the comments if you like those new t-shirts. Only Bitmine investors, okay? Obviously on the back also with the wolf logo. We are maybe preparing some merch for you. So let me know what you would love to see and if you would be interested in the first place. Make sure to subscribe to both of my channels to not miss any video. And to remember, if you never saw me before and you're watching this for the very first time, like about 40% of my viewers, then, my name is Danny and I'm looking for stocks that can go 10, 20, 30x. And we are quite early. We was early on Bitmine when it was 30 and now it's around 52-ish. So we are always early, and my subscribers that went early with me on stocks like Tesla, Nvidia, Palantir, Hood, they all, bought houses or apartments in the US. So it's kind of good to be subscribed. Now, extend day trading is maybe something for you. This is my own product and we only advertise my own product here that we put $1 million in development. We have our own software called the AutoPilot, and the AutoPilot allows us to send you all our trades that our professional day trading team is doing directly into your portfolio, okay? You don't have to do anything. You don't have to learn strategies. You don't have to be in front of the computer for 8 hours. You just switch on our software. You get all the trades all automatically, all done for you. If you are interested into that and you have $10,000, then check out xtendaytrading.com. And now let's dive in. So when you have Bitmine shares, you usually buy it cash, right? So some people use margin, but some people use a loan, which is crazy, but you should buy and use only cash to buy Bitmine shares, okay? And there's a couple of ways to actually earn money quite, I would say, risk-free with that kind of stocks, okay? So we will do it as usual, very, very simply. So we will start with, selling call options, okay? And this is how it works. So first of all, let's say you have 500 Bitmine shares, okay? So when you understand call options are actually like a contract where the owner of the shares and the buyer of the options contracts agree that they will sell the stock at a certain time in the future for a certain price, okay? So for example, let's say the call option contract of, let's say, strike price of $60 with the expiry of end of this week, which would be the 3rd of October, okay? That means that, the call option purchaser or buyer actually agree that if the stock is higher than 60, that he can buy the 100 shares of the call option seller for $60, which makes sense, right? If you're very bullish, then you think that by the end of the week, let's say the stock is at 65, you would love to buy the stock at 60, right? So that is makes sense for the call buyer. And the call buyer actually, pay a premium. So he pays a price for that contract that he's purchasing. And obviously, for example, in day trading, people are, expecting that they trade those contracts, right? So let's say they spend $2 per contract. One contract is always 100 shares. So you have to 100x the option premium, right? So if you buy it for $2, you need to spend $200 for that contract, right? Now, let's assume that, the stock price goes to 65. So $5 more than the strike price of the call option. That means the call option is actually worth $5, right? The difference between the strike price and the current price, because he could buy the shares and sell the shares for 65 on the market, but he has the right to buy it at 60. right? So, and that's why the premium goes up and down as more time the contract has, as more valuable the contract is, and as closer to the money, to the actual price of the stock, as more valuable it is. Okay. Now, so if you're holding now the shares, how you can make money? Well, let's say you have 100 shares of Bitmine, right? 100 shares of Bitmine is around $5,000, right? Now you say, you know what? Bitmine is at 52. Okay. Oh, let's make it easier. Let's say it's at 55, and the end of the week option 65 call. So a difference of about like 20% is, let's say, $2, right? So you can now sell the call option because you have the stock. You can sell one contract for $200 because you take the $2 and you multiply it by 100 shares. So you get like $200 into your portfolio. You keep your Bitmine shares, right? But you have to understand that, let's say Bitmine goes crazy in a week time, then you have to sell it, your shares, for like 65. And here's where I think it's still brilliant, because let's say you bought it for 45 and then you say like, worst case, I collected $200. I could buy more shares for that. And then I could sell, worst case, when the stock is, let's say, at 66. Okay, let's say the stock is at 66, and then you have the, obligation to sell the stock for 65. So still you made the 20%, you still keep the premium that you got, and you still sell in profit. So you can see like it's a very low risk variation to actually make money on the stock options selling, okay, on the call part. Now let's dive into the, let's say, put part, right? So there's calls and puts. The calls and puts are different because the calls are always meaning that the buyer of the call thinks the stock goes up, and the put buyer actually thinks that the stock is going down. So if you are bullish on Bitmine, you should do the following, okay? You could say, okay, I have like 100 shares of Bitmine, and now I'm selling, very far out of the money call options. And worst case, I sell for a very, very high price and still make a lot of money. And I use the premium to buy more shares or just like an income for myself, right? So that's when you are super bullish on Bitmine. Now, if you're also bullish on Bitmine, then you can do the same, but the other way around. Okay, so put options work in this way that when the put price is, let's say 35, you are exactly obligated to buy the share at $35. Okay, so that means that, let's say you sell the $35 put option, you collect the premium, you need to secure the amount in your account. So that requires a little bit more cash, because worst case scenario, by that day of that put contract, you would need to actually buy the share for $35. And for every put contract, you need to buy 100 shares. So, you need to have some capital there to work. But if you say like, let's say, okay, Bitmine is on, a downtrend, and then you say, okay, now Bitmine is at 40, now it's at 35, then the put contracts obviously are very high priced and premium. And then you say, you know what, I'm buying the next week's put contract of 25 and I collect the premium. And then worst case, if it drops to 25, I will just purchase the stocks because I want to earn as much as Bitmine as well, right? And I want to buy it at 25. So you can see here, that's like a win for you to buy lower and still got the premium, right? So you get the premium, you get the stock for lower if it goes that way. If it never goes, you just keep the premium, which is like a win-win. And you want to get your average down as well, right? If you want to buy lower anyway, then this is a nice way to do that for a fixed price and you get the premium, right? So that's quite interesting. Now on the call side, it's the same. If you say like, well, I'm taking the 1 month, let's say, end of October expiry call option of $80 in Bitmine. So that means, you collect all the premium, and when the stock goes down, you just keep the premium, the options just expires worthless. And, on the other side, you are also make sure that, if it goes over 80, then then you can, or you must sell it for 80 at the day of expiry, right? But if you bought it at 50, like you have a nice profit there and you kept the premium. So you can see here, it's a very interesting. The only thing where you lose on the call options or put options when you sell them is once if, let's say, the price of Bitmine goes below your put strike price, let's say it goes to 20 and you choose like a $30 in put price, then you still have to buy the shares at 30, okay? Even when they are at 20. Same other way around for the calls. If you actually see that they are, the stock, it goes up to 100 and you sold a $80 call, then you are obligated to sell it for 80 to the option exerciser. Okay, so you lose a little bit of the upside. So, there's just this little kind of things that you need to consider. But I think like sometimes, I sell a couple of call options, specifically when we go into this interesting, turbulent and volatile market phases. So I think that this is something very, very important to watch. And I see you tomorrow for a brand new video. Let me know about the t-shirt and check out xnDayTrading.com. And I see you tomorrow for a brand new video.